A great vampire squid wrapped around the face of humanity, relentlessly jamming its blood funnel into anything that smells like money. This vivid description, penned by Rolling Stone journalist Matt Taibbi, paints a stark picture of Goldman Sachs. It's a description that has stuck, encapsulating the public's often uneasy relationship with this financial behemoth. Goldman Sachs, for many, represents the opaque and seemingly untouchable world of high finance, a world where vast fortunes are made and lost. But how did this image come to be? How did a firm founded over 150 years ago rise to such a position of power and controversy? This essay delves into the history of Goldman Sachs, tracing its evolution from humble beginnings to its current status as a global financial titan. We will explore the firm's remarkable successes, its innovative spirit, and its undeniable impact on the global economy. But we will also confront the shadows that have come to define its public image. Its role in the 2008 financial crisis, its close ties to governments around the world, and the persistent accusations of ethical lapses. Ultimately, this essay seeks to understand the complex legacy of Goldman Sachs. Is it a force for good driving economic growth and progress, or is it a parasitic entity profiting at the expense of the many? The answer, as we shall see, is far from simple. It is a story of ambition and innovation, but also of greed and recklessness. It is a story that continues to unfold today, shaping the financial landscape and impacting the lives of millions around the globe. The story of Goldman Sachs begins in 1869 with a German immigrant named Marcus Goldman. Arriving in New York City with little more than ambition and a keen eye for opportunity, Goldman established a small firm specializing in a then niche area of finance, discounting commercial paper. This involved buying promissory notes from businesses at a discount and then collecting the full value upon maturity. Goldman's business thrived, fueled by the rapid industrialization of the late 19th century. In 1882, he brought his son-in-law, Samuel Sachs, into the fold, formally establishing the partnership of M. Goldman and Sachs. This marked the beginning of a dynasty, one that would see the firm navigate the tumultuous waters of the financial world for over a century, adapting and evolving with each passing decade. The late 19th and early 20th centuries saw Goldman Sachs expand its operations beyond commercial paper, venturing into the burgeoning world of stock trading. The firm played a key role in the initial public offerings of several major corporations, including Sears, Roebuck and Company, establishing itself as a leading player in the rapidly growing field of investment banking. This period also saw the firm establish its presence overseas, opening offices in London and other major financial hubs, laying the groundwork for its future global dominance. No exploration of Goldman Sachs' history would be complete without confronting its controversial role in the 2008 financial crisis. This period stands as a stark reminder of the firm's immense power and the devastating consequences that can arise when that power is misused. At the heart of the crisis lay complex financial instruments known as mortgage-backed securities and collateralized debt obligations. Goldman Sachs, along with other major financial institutions, played a key role in creating and selling these securities, packaging together thousands of mortgages, many of them subprime, and marketing them to investors as low-risk investments. What they failed to disclose, however, was the high probability that many of these mortgages would default, particularly as housing prices began to stagnate and then plummet. When the housing bubble burst, the consequences were catastrophic. Millions of homeowners faced foreclosure, financial institutions teetered on the brink of collapse, and the global economy plunged into the worst recession since the Great Depression. Section 4. A legacy forged in crisis. The 2008 financial crisis cast a long shadow over Goldman Sachs, tarnishing its reputation and inviting intense scrutiny from regulators and the public alike. The firm faced accusations of misleading investors about the risks associated with mortgage-backed securities and collateralized debt obligations, of profiting from the very crisis it helped create, and of wielding undue influence over government policymakers. In 2010, Goldman Sachs agreed to pay a then-record $550 million to settle Securities and Exchange Commission charges that it had misled investors about a complex mortgage-related security. While the firm did not admit wrongdoing, the settlement marked a significant blow to its reputation and fueled public outrage over Wall Street's role in the financial meltdown. The 2008 crisis was a watershed moment for Goldman Sachs, forcing the firm to confront difficult questions about its culture, its ethics, and its responsibility to the broader financial system. Section 5, the Alchemy of Innovation. Despite the controversies, Goldman Sachs' history is also one of remarkable innovation. Throughout its existence, the firm has consistently been at the forefront of financial engineering, developing new and often complex financial products and strategies. From its early days of pioneering commercial paper trading to its later forays into derivatives, currency trading, and asset management, Goldman Sachs has consistently pushed the boundaries of finance. One example of this innovative spirit is the firm's early adoption of technology. Goldman Sachs was among the first financial institutions to recognize the transformative potential of computers, using them to analyze data, execute trades, and manage risk. This early embrace of technology gave the firm a significant competitive advantage and paved the way for the high-frequency trading algorithms that dominate today's markets. This constant drive to innovate has been a key factor in Goldman Sachs' success, allowing it to adapt to changing market conditions, capitalize on new opportunities, and remain one step ahead of its competitors.